Hey everyone, and thank you for tuning into our cut flower video series. My name is Eryn Bell. I'm with the UT Center of Farm Management and work as a farm management extension specialist. So today's video is going to focus on some of those initial business questions we get from those who are looking to either expand their cut flower operation or for those who are just starting out. So when it comes to the business side of farm operations, it can get overwhelming quickly. So we hope to ease some of that stress by addressing a few key topics. So we're going to cover two main things today that we think will help you get more comfortable with the business side of your cut flower operation. First, we're going to talk about the main tax form you will need to become familiar with. Then we're going to discuss the different entity options you have as a business, and then close on a few key resources we want to make sure you walk away with and can refer to. So first, I'm going to start us off by discussing some of the basics around taxes for farms specifically. Now, of course, many farms qualify for the ag sales tax exemption as well as the green belt. But for today's purposes, we're going to talk about filing taxes specifically. Some of those other tax topics we'll have in a different video. So the things you need to keep up with in order to correctly file your farm's taxes is what we're going to focus on today. So just a quick disclaimer, all information provided is considered educational and not legal or tax advice. I am not a CPA, so be sure to discuss specific tax-related issues with a well-trained tax preparer or certified public accountant. So kind of going off that, and speaking of CPAs, I do always like to throw a little note in about finding a CPA or tax preparer for your farm. So there are many fantastic CPAs and tax preparers out there, but we do suggest that you find one who has agricultural experience. So when it comes to having a farm and operating an ag business, there are many farm-specific tax forms as well as deductions and rules. So we just want to make sure that whoever you're working with has that appropriate knowledge for farms specifically. So the form I want to get you all familiar with is called a Schedule F, which is your profit or loss from farming reporting document. This form is used to report all farm income and all farm expenses brought in or spent throughout the fiscal year for your farm. This information is then in turn used to determine your farm's net profit or its net loss. Now, once that profit or loss is figured, what does that mean for you? Well, it's going to determine how you're taxed. For example, if you turn a profit for the year, you'll be subject to federal income tax as well as self-employment tax. So self-employment tax, that's going to include your Social Security and Medicare, which runs about 15.3%. And then your federal income tax, that's going to be based off of what you are personally. So everyone's going to be different there. You will not be charged self-employment tax if you do not pull a profit for the year. So let's take a bit of a closer look at this form. I want to show it to you first in its entirety so you can see how the form is laid out. It's a fairly easy form to navigate. The top section is your personal information, things like your name, Social Security number, and EIN number if you have one. Now, an EIN number is an employer identification number, which is given to you if you have registered your business as a specific entity with the Internal Revenue Service. You will not have an EIN number if you have not registered as a business. I'll be discussing business entities here in just a minute, so hang tight on that thought. Now, if you do not have an EIN number, that is fine. Just simply put your name and Social Security number, and that'll be perfectly fine. This section is then followed by Part 1, which is all farm income. Following farm income is Part 2, which is all of your farm expenses. At the bottom of the form, line item 34, you will then see net profit or loss, which is figured by subtracting line 33, which is your total expenses, from line 9, which is your gross income. The profit or loss that is then found on line 34 is what they will then tax with that self-employment and that federal income tax. Let's take a closer look at Part 1, your farm income. You will notice that each line item number is tied to a specific income category, as in how or why you made that income. Line 1A is the sale of purchased livestock. or other resale items. You'll notice under line 1A, there's a 1B, which allows you to subtract the cost of the purchased livestock or other resale items that you have purchased. Line 2 is the sale of livestock, produce, grains, and other products that you raised. In essence, these are products that were born, produced, or raised on your farm from the beginning. They were not purchased from someone else and then resold by you. So the main line items you're going to use on this form are 1 and 2. I just like to show that difference. That way you don't just stack everything in line number 2. You're going to want to make sure to take that basis out of items that you have bought and resold. So those items will go on line 1. Other incomes you can list on this part of the form include cooperative distributions, ag program payments, commodity credit corporation loans, crop insurance, federal crop disaster payments, custom hire work, as in if someone hires you to come out and do ag machine work like tilling up beds, seeding for them, that would go on that line item. Or line item 8, which gives you the opportunity to list other farm incomes that don't necessarily fall under one of these specific categories. So not each of these line items are going to apply to you, and that's okay. So just be sure to fill out the ones that do, and don't worry about leaving the others blank. Sometimes people feel like they've got to fill out every single line item. That's not how this form works. So it's okay if you've got some blank spaces. You will see at the bottom of this part, line item 9 is where you're going to add up all the other line items, and that is going to be your gross income for that fiscal year. Okay, jumping now to part 2 of the form, let's take a look at farm expenses and how you report those. So just like with the farm income portion of this form, the farm expenses portion also utilizes line items that correlate with a specific expense category. These categories organize what your different expenses went towards. So when it comes to farming expenses, it can definitely seem like money can go all sorts of directions, but luckily there's a line item for almost everything here. So I am not going to walk through every single line item, but I do want to pause and point out a few that I know as cut flower producers we're going to use. First one I want to look at is line item 11, chemicals. So this is where you're going to list all expenses that have to do with any kind of chemical you purchased for your farm. For us, it could be chemicals for weed control or pest control within our flower bed. So any herbicides, pesticides, fungicides, any of those purchases are going to go there. Next is line item 17, fertilizer and lime. Many of us will purchase this and use it within our beds throughout the year, so those will be listed there. Jumping over to the other side of the form, look at line item 26, seeds and plants. This is where you can list out any of the expenses having to do with any seeds, bulbs, tubers, plants, any of those things that you purchased. Storage is a big thing for us as cut flower farms as well. We might have cold storage for our plants, for our bulbs, or just storage for extra trays and containers. All of these expenses will be listed under line item 27, storage and warehousing. We also run through a lot of supplies, things like trays, labels, gardening tools. These can be listed under line item 28, supplies. Now, the very last line item, number 32, is where you can list all other expenses that may not have fallen under one of these specific categories. Line item 33 is where you will total your farm expenses. This is the value that will be taken from your income, resulting in your farm net profit or loss. So I know there are a lot of line items on the expense portion, but hopefully this helped clarify a few key ones that you're going to be using for your cut flower operation. So before we move on from taxes, I did want to highlight just a few thoughts. First, know that your Schedule F must be filed each year that your working farm is in operation. Also know that your Schedule F will be turned in and reported on your 1040 form. Now, I do just briefly want to discuss the difference between a hobby farm and a working farm, as that changes how you can claim it on your taxes. So the IRS has what's called the 5-year rule for farm losses. What this means is that your farm must show a profit 3 out of 5 years to be considered a working farm. If you don't reach this criteria, you'll be considered a hobby farm and won't be able to file a Schedule F and claim it on your taxes like other working farms can. For example, if you had a net loss in years 2021 and 2022, you would need to show a profit in years 23, 24, and 25 to stay considered a working farm. Or if you had a profit in 21, it doesn't have to be consecutive years, but let's say you had a good year in 21, but you had a loss in 22 and 23, you would then need to show a profit in years 24 and 25 to stay considered a working farm. We get a lot of questions on this, so I just wanted to make sure to point it out and discuss it briefly in this video. Okay, so the next topic we're going to talk about is discussing business entities. This is another area that we get a ton of questions on, so we wanted to make sure to address that. We hope this section helps answer some of your initial questions because I know business entity selection can get confusing. So first, I want to open up by talking about what a business entity is, why we have them, and what they're used for. So a business entity is the legal structure that outlines the legal parameters of a business operation. It's going to create an outline or a set of guidelines that can affect how taxes are handled, the rights and privileges of the owners, the management structure that's followed, how profit allocation is handled, liability, and many other business entity topics. So it kind of lays out how your business is going to run and function. There are two groups of entities, default entities and formal entities. So your default entities are those that were never formally registered, as they were never registered with the Internal Revenue Service. So by default, they're either going to be a sole proprietorship, a general partnership, or an unincorporated nonprofit. It's more of just an understanding. It's not having to be filed. Now, formal entities are those that must be formally registered in order to be recognized as such. So if you don't register, but you think you're operating an LLC, the IRS is not going to recognize it that way. You have to register it as a business. So formal entities include LLCs, which is your limited liability companies, B, C, or S corporations, cooperatives, or nonprofits. So just kind of think, if you don't register, you're either going to be a sole proprietor or a general partnership. If you do register, you can choose one of these other options and be recognized as such. So what are the differences between each of these entities? So this chart taken from the SARE Farmer's Guide to Business Structure does a fantastic job of illustrating the difference between each one. Like I mentioned before, entity selection determines how many different situations are going to be handled within a business. So for example, certain entities are required to prepare a set of organizing documents and host annual meetings with owners and other board members, while others are not. So LLC, sole proprietorships, and general partnerships are exempt from this requirement. They do not have to come up with these documents or host these meetings. However, others do require it, like your corporations. Some business entities receive no personal liability protection. These are going to include your sole proprietorships and general partnerships. Other entities have what are called pass-through taxes, as the entity itself is not taxed, but the individuals who receive profits from that business are. So that would include LLCs, S corps, sole proprietorships, and general partnerships. So again, I'm not going to walk through each of these scenarios or each of these things on this chart, but just know each entity has its own list of pros and cons. So make sure that you thoroughly research what is required and what is needed for your business specifically. Okay, so this I have to say is probably one of the biggest misconceptions people have when it comes to operating a farm as a business. We get the question all the time of, do I have to register as a specific entity with the IRS before I can start operating? And the answer is no. As a farm, you will automatically be considered either a sole proprietorship or a general partnership. You do not have to register in order to start operating. So many people think, well, I need to start a business to have a farm. I'm going to go ahead and open up an LLC before I get things going. And just realize that you don't have to do that. Now, you may want to do that based off of what you're operating as or what you're producing. So there's nothing wrong with taking that step first. However, just realize that you don't have to. So if you decide not to register as a business, when filling out a Schedule F, you're just going to put your name and your social security number. And again, the IRS will just say, okay, they're a sole proprietorship or a general partnership based off of how it's filed. Nothing formal has to be done in this situation. So when you come across that EIN space on the Schedule F, realize it can just be left blank, and that's okay. The next question we get a lot is, what entity should I be? And this question is so hard for us to answer because it absolutely depends on the ownership structure that you want, your goals, what you're producing, and the liability needs that you have or the tax needs that you have. So just realize no one can really answer that for you, but hopefully we can give you enough information to help you make the right decision for your business. Now, remember, with liability, your entity isn't the only thing that can protect you. Many farms have special insurance policies that protect them as well. So just keep in mind, use your insurance and your entity selection to help protect you. We highly recommend speaking to an attorney who has farm experience that can help you make these decisions as you move forward. Also speak with your insurance agent to see how they can help you too. One of the best publications out there that can really help you think through entity selection is going to be that SARE the SARE Farmer's Guide to Business Structures. You can download it for free with the link I've got up here, and I'm going to show it here again in just a minute. So closing out, I know I've thrown a lot of different resources your way, so I just kind of wanted to do a slide summarizing it. First is the Farmer's Tax Guide. This is an in-depth explanation of how federal laws apply to farming, provided by the Internal Revenue Service. Second is the Profit or Loss from Farming Schedule F form. The instructions the IRS has for this form are also very helpful and break out each line item for you if you have some questions on that. Besides business entities, you may also have different business licenses and taxes in the state of Tennessee that you'll need. The Center for Profitable Ag has a wonderful publication on this. It's that PB 1896. So I do suggest looking that one up and looking at it. Lastly, again, a great publication to help you determine which entity you should be is going to be that SARE Farmer's Guide to Business Structures. In closing, I did want to let you know that the UT Center of Farm Management has one of us, a farm management specialist in each area within the state of Tennessee. So make sure that you utilize us and our resources. You can go to our website at farmmanagement.tennessee.edu to find a contact for the specialist in your specific area. So we do focus on financial management and can help you, really determine your current financial situation, help you review that. We can help you identify your farm strengths and weaknesses. We can assist you in developing your farm and financial plans or business plans. We can also help you analyze and shift to possible new enterprises, including cut flowers. Besides these one-on-one evaluations that we do and farm visits that we do, we also offer several programs across the state, including our Master Farm Manager course, which focuses on in-depth business foundations. We also have Farming Fundamentals, which assists those who are just getting started into farming and really just help them know where to start and those first steps to take. We also offer Farm Transition Planning, which helps families organize transitions to that next generation. We then offer income tax seminars, which helps educate tax professionals on farm taxes specifically. Again, thank you so much for tuning in. We really hope that this segment was helpful to you. Remember, there's a farm management specialist in your area, so make sure to reach out to us. Thanks.